Thank you, everyone. Hello and welcome to Jim's Dalton's presentation, an impromptu webinar to talk about yesterday's all-time high. It's great to see you all. We got a full house, still pouring in. We'll go for about 45 minutes. This is being recorded. Thank you all for being here. It's really, really neat, and I thank Jim, my partner, for telling me last night I think we should have a webinar because we're getting so many questions and share with the group what we're thinking or what I'm thinking. So thanks for coming out, and thank you, Jim. And I'll hand it over to Jim.
Actually, the thanks should go to Julia because she didn't finish putting this out, I don't think, till about 10:30 last night because of the time change. So when I called her and asked her if this was doable, she didn't take my head off. I was very pleased. Thank you, Julia, very much. I hope you got some sleep after that.
That is not fair. I said that's a great idea. All right.
All right. Good morning. As I say, the most emails I always get are, was this the start of something? Was this long-term selling? Was this long-term buying? And everybody's looking for the big moment. And I got several yesterday wanting to know, was yesterday's high a good high? Was this the start of a new auction to the downside? And I just said, well, the number of emails I've got, it must be on a lot of people's mind. But first of all, I want to start with a little background about trading. And trading is not always about the numbers, and it's not always about the references. We had two references that we've been working with the S&Ps. One was up at the I don't know, it was about 2000 and 2109, someplace in there, which was a profile high. 2107 was the number shown on the bar charts for highs. And we'd been there once, twice, three times, four. We're talking about proximity. So 1, 2, 3, 4, 5, 6, 7. We'd been up in that range about 7 times prior to yesterday. The 2 days prior to yesterday were 2103.10 and 2103.30. This is using the large contract, which makes no difference. What I'm trying to say is what makes trading so difficult is understanding how traders use these references. For example, on Wednesday, I had a trader that didn't take the short from here because it was so close to the other high. He thought it was a poor high. And the answer was it was. But mechanical, when there's no longer-term money in the market, which I haven't seen any longer-term money of significance for some time in this market, for months. And I mean, that doesn't mean they're not changing positions, but I don't see any signs of strong buying or strong selling. There's some consistent underlying buying, but it's not heavy. For example, yesterday, when the market was near the highs, SDS, which is double short the S&Ps, was down 22 cents. It's an ETF that's double short the S&Ps. It was down 22 cents. And I was talking to Julie about that. I said, so what does it tell me? It tells me that it's not the overall market that's strong. It's a couple of stocks that are driving the market. So again, just because prices are high, there's no indication that we've got significant long-term money coming into the market. But it's clear they haven't been selling. So what I think happened, you had, what did we say, 1, 2, 3, 4, 5, basically 7 highs, all in a very tight range, with Wednesday and Thursday's high being almost identical. Well, the market sold off on, with Tuesday and Wednesday's high being almost identical. So the market sold off on Wednesday, and it sold off, it got down fairly low on the overnight market. Traders are just doing mechanical things. This is a reference to mechanical reference. It doesn't go through it, and they sell it. And it's a trade. You have to understand that that's what they're doing, and you can use that with fairly tight stops. What happens, and what happened yesterday, is over a period of time, you've got these 7 highs. It doesn't take a particularly smart group of traders to figure out that there's a tremendous number of stops up there. And eventually, there's 2 things happen. All the people that have shorted up here at these 7 different highs, they start feeling some pressure. And so maybe they're a little quicker to buy, but smarter money, and I really think there's some smart short-term money that's pretty good size. I wouldn't be surprised if these guys don't signal each other, but they come in like a day like yesterday, and it's just time. There's so many stops, it's time to go after those stops. And that's what you saw yesterday. You saw a short covering rally, and you just saw the market going after and punishing those people that were doing the mechanical trades. Now, let's go back to the profile. So now you break yesterday afternoon, and it just felt like a break. The volume was relatively low for what was going on. The shape wasn't there. The tempo was slow. Late in the day, the non-thinking traders try one more run to the upside, and that finally completed yesterday. So what happened? This was all short-term money in there, all trading money that got some stops, that brought in some momentum buying, and then you got a liquidation break on the close. That's all you got on the close. And that's the real question when people get excited, is this the high? And I was saying to people, I don't think so. Usually what happens, once you make a new high, you will normally make several new highs in the coming weeks. Now, obviously, there'll be one time when that doesn't happen. But yesterday's break, there was no real selling up here. Just all you got was liquidation. And you notice that the settle was down at the 2107 level. And if you saw when we looked at the bar chart, the most prominent reference we had in the bar chart was 2107. So for all practical purposes, we build value above the new high. We didn't really get back into anything down here, so there was nothing serious going on. You got liquidation late in the day. A lot of daytime frame traders have to go home flat, and other smarter traders figure that out, and they press them, and then you get the panic set in from short-term, weaker hand traders that just start selling. So one, I don't think it was a lasting high. We'll see after the day is over. Well, we'll get a better idea. But I think all we saw was liquidation on the close. We didn't see any really strong buying, but all we saw was liquidation. I didn't see any indication of any serious selling in there. Now, when we're looking at today, yesterday afternoon's pullback low was at 2105.75. So that would take we're still using the 2107 level, which was the settle, which was the bar chart high. And then we've got the pullback low at 2105.75. So after this market opens this morning, if there's anything on the downside, we should pretty easily and pretty quickly get below 2107 and get below the 2105.75 pullback low from yesterday. Once you get below the pullback low, if there's anything here, even on a short-term basis, you should start to see some acceleration on the downside. So as you saw the report that went out last night, I don't know, I think Julia sent that to everyone, but the report was done after the close, and the question was this a lasting long time, all-time high? And I think it said Jim doesn't think so. And so you're always kind of thinking ahead in these markets. Yesterday, if you were just looking yesterday morning at these markets, you were sitting down in this area, which is about the 2105 and below, and it looked like it was a nothing day. The only clue was it was a very narrow base. Generally, these narrow bases get knocked over, and then all of a sudden, in E period, the game was on. The game was on. All of a sudden, you just start. If you looked at the profile, you'd want to fade this. You look at the profile; it was 5 wide down here. It goes up here. You say, oh, that's a good fade. But if you think about the market, which is what you have to do to stay alive, and you recognize that all these shorts are up here, or all these stops that are going to be here, and it's truly, truly was the firecracker effect. Stops, 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 more stops over here. That's all you saw yesterday. You saw a short covering rally, and you saw what we talk about so often, which is the firecracker effect. In other words, one set of stops sets off another set of stops, etc. So now we've got about 18, 19 minutes before the open. So we've got overnight inventory. The settle was right here at 2107. The majority of overnight inventory is long, so we're coming into a market with long overnight inventory. We're back up near the all-time highs. That's where we are to open the morning. If there's anything on the downside, like I say, we sell off and we very quickly get below the 2107 level and down below the pullback low at 2105.75. Okay, with about 15, 16 minutes to go, Julia, let me handle a couple of questions, please.
Okay, great, Jim. Thank you. I've heard you say that the more times we stop at a reference, once we break through it, the odds do not favor a continuation in that direction. Could this be the case here?
It could be. It could be. I mean, you know, there was no new buying when we got through that reference yesterday. But again, what I do is take it just one single day at a time. We have been for many days here, 40 days now, 38, 39, 40, whatever the number is. There has been nothing really going on in this market. No confidence. We've been a lot of rotation. They keep testing the highs. We've never had any good highs. So it certainly can be the case. But that's why I just take it a day at a time. There is one of the things that helped me yesterday. Notice the pullback low in the morning was just a single tick below the opening. Early, the first part of the morning, we had a pullback low. It went one tick below the pullback low, rallied, came down again. One tick below the opening, rallied again. And, you know, at that point in time...
You want to split that? Excuse me, Jim, just for people not familiar looking. Thanks.
So the B period low came just a tick below the open, which is the green dot. And that's not a particularly strong sign, because that would be considered kind of a weak pullback reference. However, you know, then the market, then you had a two-bar balance. So your short-term trade yesterday, your short-term trade is when you come out of the two overlapping bars. Now you say, well, what about this up here? Well, you know, this is because the base was so narrow, this is a trade worth taking. Very mechanical. It goes up above this, you got your stop someplace around, you know, a third, half back in the CD period. But one of the things it did, and Julia saw my my positions a couple of times yesterday, and what I did is I had bought calls because I had a pretty good idea what they were going to do yesterday. I knew these stops were here, been watching them for some period of time. We're well aware of the firecracker effect. But little nuances, because this was not a particularly strong reference, and the profile shape looked more like short covering than new business. Short covering is considered old business. New business, we more than likely, our combination, a more potent combination of new business and short covering, more than likely we would have taken these stops out quicker. We'd have more easily gotten above the all-time high and extended. The fact that we didn't told me that basically I had short covering and just short-term trading. So I bought calls. Now my choice was I could have sold those calls, or I could have gone short against those calls. And what I elected to do was go short. I bought a few puts up here and I went short against the calls. Part of the reason that I elected not to sell the calls but to go short against the calls was that the calls were in the money, so there wasn't much premium left because they expired today. But secondly, by the time we got to the highs, I was 100% short against the call. So the real payoff came when the market corrected yesterday afternoon, being 100% short the 100% short the stock. But some of the things that factored into it, because I really thought this was a weak low down here. Now, that is also still factored in today, because this was not a particularly good low, a test back here, one tick below the open. But one tick can be one time can be a coincidence. So do I think this overall market is strong? No, I don't. Do I see any signs yet that there's anything major on the downside? No, I don't. My position coming in this morning is totally neutral. As I told Julie and Schroeder last night, I just closed everything out. I went home flat because I said I just didn't particularly like the market, but I didn't see anything significant on the downside. Okay, questions?
Was not the key to this rally from April 22nd the excess that looked below the daily low from April 20th and the gap? Maybe we could look at well, maybe the profiles will show it there. So let's point to, okay, we had no, I think, Jim, we've gone by it. It's up above. April 22nd, look below the 2-day balance. The destination was reached on the other side. Well, it barely scratched above it.
Barely. I think that's something. I think you're reaching in hindsight. In hindsight, oh look, it looks below this. And we did call this. We were trading that day. We looked below it, and our destination trade was the 2-day high. And we were live. We got that trade, but 2 ticks below this certainly isn't anything to write home about. And the shape of the profile didn't indicate anything major. So I think this is it's a hindsight call rather than anything else. I mean, the biggest piece of information I've been talking about for weeks is there's never been any completion to the long-term rally. You know, anybody that's been with me for any period of time, I bet they've heard that 100 times. That's been a reminder, I bet 100 times to people. They get all excited about the downside, and I said, that may be, but keep in mind, there's never been any completion to the upside. I think the biggest piece of information, no completion to the upside, and stops just built to a level that the traders couldn't resist. Okay?
And just to put that in another language, there was no excess. I mean, if you look at the all-time highs from the beginning of the year, maybe back to February, it was 2109.75, 2107.75, 2107, 2105.75. So, you know, it's kind of that firecracker effect where one high triggers and trips the next one as they run the stops and on and on. So,
so yesterday we took one set of stops, 2, 3, 4, 5, 6, 7. That's a firecracker. We took
pop. Yep.
7. Once this high is taken, it triggers this high triggers this high triggers these highs trigger this high. That's exactly what you saw yesterday. It's so classical firecracker effect that we talk about. It was just a perfect example.
What does completion look like? You'd have excess. You'd see some aggressive rejection, single prints, a lot of a tail. I don't know if you have anything to add to that, Jim.
Now, people always ask that question, and it always takes different forms. But basically, what you'll see is a market will make a high, and it will then start to move fairly aggressively away from that high, and it will be, you know, you'll have an indication that you had not only liquidation, but you had some good long-term selling coming in, and you didn't have that yesterday. All you had was liquidation. So it's easier to identify it in what it's not. It's what it's not, and it's everything we do is context. It was interesting to me out in Phoenix the other day. Carlos Slim from Mexico, the richest man in the world, was talking, and one of the things that they were, when I was listening to him talk, they had someone on television, and he's talking to people, and I wanted to say, so true. Here's the richest man in the world, and he's basically saying, too many people are trying to focus on facts rather than the context associated with those facts. And I kept saying, that's exactly what we said for so long. Everything's a series of facts surrounded by other circumstances. But it's the other circumstances that really make the difference as to what is occurring. Too many people, it's easy to memorize the facts. It's easy to memorize. I got this reference, I can measure this reference and everything. But the context, that's why I say it's important, the context yesterday. What was going on yesterday? Basically, it looked like short covering. Did not look like new business. Okay, a couple more questions. We got a few minutes.
Yes, just to comment to the group, Jim hasn't mentioned it yet, but there's a question with this, the NASDAQ made new all-time highs in the overnight market. And we have a question, to what extent do you monitor and act upon what is going on in other futures markets, in other words, for example, the NASDAQ, etc., as it relates to the S&Ps?
I think it's am I aware of it? Yes. I do not live in a vacuum. But I don't spend a lot of time looking at other markets. From time to time, when the dollar was really spiking and making new dramatic highs every day, yes, I looked at the dollar because I know that when things are really dramatic, it can have neither a negative or positive impact on the S&Ps. But one of the worst things you can do is get too enamored with trying to trade this market off of the other market. If you're going to follow and want to know what the S&Ps are doing, trade the NASDAQ, not the S&Ps. Somebody said the other day, well, the market went down or up, I forget which was, because of the bond market. And I was just amazed when I heard that comment, because I didn't see anything at all that, if we get that stuff in our mind, or somebody's told us that, and like I said, there are occasions when oil was spiking, down every day, that had an emotional impact, and when the dollar was going up every day, it had an emotional impact on short-term trading. But overall, you are better off to look at the market-generated information in the market you are trading. Now, given that sounds so simple, but given that, I will confess that yesterday afternoon, when I was short and I was watching, short against my calls, and I was watching for this market to see what really happened, I sent an IM to Julia, and I said the NASDAQ's off 10 handles from the high. So I did have it up. I was looking, and I was doing a little bit of judging about the emotional trading, and I saw the emotional traders had lost a little bit of their staying power. So was I looking at it? Yes. Was it my overall riding factor? Absolutely not.
Okay, thank you, Jim. We have several questions on this. People using unadjusted data are coming up with the current contract high at 2117.75. I'm not sure how that. It wasn't 2117 on the front month. I'm not sure how they're coming up with it, but there's several traders. What is your view of that being significant or not?
Here's what I don't know. All I can tell you is what I do. I go over and I look and I say, what month am I trading? I'm trading June. I go to my CQG, standard rollover at expiration by the current month, and I look to see, okay, what numbers do I have based upon the current month? Those are the numbers that I use.
Can we look at a monthly, though, Jim, and a weekly to see CQG's adjustment?
We get a lot of this stuff.
Just maybe spread it out a little. I mean, talk about no completion. 3 months, it looks like someone sawed off the top. So what is that level? You got 21.
Hold on. Chart preference by month.
So you adjusted for the front month.
2114.
20.
What was yesterday's high?
2114.50.
Okay, this is the big contract. So this is what I do. I use the front month, and I don't mess with anything else. I don't know if that's the right answer, and I understand there's all kind of numbers. People do all kinds of things. I don't. I look at the current month that I'm trading and the current month of the real contracts traders are going to be looking at. Okay?
Okay.
We got 5 minutes, a couple more questions.
Does spoofing as reflected in the Department of Justice accusations against this trader in London affect the market profile tape reading?
It's really interesting. Of course, they've outlawed that now, and spoofing really is, just so you know what that term is. Spoofing is putting in a lot of bids and offers and then immediately canceling them, and that's somewhat oversimplified. But these computers move at billions of a second speed. At one time, and I know it was a couple of years ago, at one time, 95% of the limit orders that had been placed in the market were canceled. It was part of the spoofing, part of this whole thing with bots or robots or algorithm trading, and so now they've outlawed spoofing. But there's so many games that go on, and there's so many people trying to build algorithms to trade the market, and it's hard to say. But this is why I look at the overall market. I look at the overall market, what's going on. I do not follow ladders and things of that nature for multiple reasons. Number one, I don't trust them. Number two, when I follow those ladders, I get myself too focused on two very tight time frames, and I lose the bigger perspective which is in the market. And people say, well, I only use it to get in the market. I'll tell you, once you look at those minutia type of things, you get addicted to them. It's very hard to ever get your perspective back for that day. Okay? Incidentally, if you want to read a book, it was sent to me the other day, Dark Pools, written by the same guy that wrote Quants. I think it was in 2 or 3 years ago. But it's a book on the AI and the algorithms and the dark pools, and it reads like a novel. So far it's a lot of fun. Okay, another couple questions.
Great, thanks, Jim. Can we take a look at crude? We got a lot of crude traders. Crude oil opened within bounds and appears to be creating an opening drive lower. Does this seem like an inventory adjustment since yesterday's rally failed to elongate?
Well, what did you have yesterday? Yesterday looked like a short covering. Yesterday looked like a short covering rally in crude. And then you had a weak, you had a fairly weak close. Crude's been all over the place. You're still within, you're very thin out. Yes, very thin yesterday. You're still within yesterday's range in crude.
It looks like overnight inventory must have been pretty short too after the settle.
And you've still got quite a breakout from, that's the monthly.
How about, okay, yep, so we got...
Okay, this is what you look like on a daily. Okay, we're going to go in 1 minute. I'm going back to the S&Ps because that's...
Do you have a second to look at gold, or are we going to open?
No, I do not.
Can you collapse that, Jim, the profile from yesterday, please, and slide over your profiles and up so we can get as much from prior? Thank you. We might have to make that a little larger, yeah, once we open.
Okay. So we know overnight inventory is long. It's like what I said last night. It didn't look to me like the all-time high was in, so I didn't get excited. I went home flat. I didn't go home with any shorts, which if you're looking at price would have been easy to do. So now we're going to watch pretty closely. The all-time high, our big reference this morning is 2105.75, which was the pullback low from yesterday.
And anyone who doesn't have the reports or just coming in the room, you can go to jdaltontrading.com and grab them from the webinar post. 2 reports are there.
Okay. The big thing that I really wanted to do this impromptu session has already been taken care of, and I was trying to address the issue that so many people were, was this the big one? Is this the start of the big one? And I wanted to address the issue that I really didn't see. I didn't see the odds of that, and I didn't want to get overly excited. about that. And like I say, that's why if I would have thought there was something there, I certainly wouldn't have gone home flat. But so far we've accomplished what I set out to accomplish, and that was to kind of reassure people that it was, the odds were very low that yesterday was the start of anything major on the downside. You basically saw short covering and you saw some late liquidation.
Okay, Jim, and now that we're looking at a double distribution, you referenced that last night in the report, but right now we're pretty, having acceptance above the 2107 level, and really we're in the upper distribution of the double distribution. Pretty much that's going to be our fulcrum in terms of a short-term reference to trade this open. Obviously, it's 6 ticks. It's still settling in.
Yeah, it's I mean, your short-term reference, the overnight high as well as the all-time high yesterday. But right now, again, there's no follow-through. There's no follow-through to the downside. We don't know what's going to develop as the day goes on. But there's clearly, what I really was trying to do was get people to the point of, yesterday didn't look like the start of the big one. Now, do I like yesterday? No. I don't think the profile was healthy. I don't think the trade was healthy. I don't think there was any indication of any new money in there. Do I think there's a lot of risk in being long in this market? Yes, I do. Was overnight inventory long? Yes, it was.
And so overnight inventory, 65% adjustment, but at least that's what we've tracked over almost 2 years. So right now we may be seeing, the start of an overnight inventory adjustment. And then we'll have to monitor to see if it's more meaningful for the day or if it's just an adjustment. It's going to go back in the direction it was, it has been. Correct?
Yep. The most difficult, as we've said and written so many times, the most difficult days for traders are when you get an adjustment to overnight inventory. So say, for example, overnight inventory is long, you get an adjustment to overnight inventory, and then once
sells off,
so you get a counter auction that takes the market lower, and once the adjustment for overnight inventory is completed, then the market turns around and goes higher. That's the most difficult pattern for traders. I mean, sometimes you correct for overnight inventory and you continue lower. Sometimes you correct for overnight inventory, that's all it was, then the market goes back on its merry way to the upside. The big traps come when you don't recognize it was nothing more than a correction of overnight inventory.
Right, and now we know the target is unchanged if they're going to go anywhere, right? That obviously in terms of...
Well, it's going to be the first thing I'd be looking at here is the overnight halfway back, then I'd be looking at unchanged. Then you're looking at the
single prints, double
pullback low,
distribution.
the pullback low of 2105.75. Then you're looking again a combination of the overnight low and the high here at the 2103 level.
Could you draw the single prints on the upper distribution there from yesterday, Jim? The GHL, isn't it suspect? Do you see the over on yesterday's profile where the single prints start?
Right here?
No, above, where the single prints are on the highs, because we tested that this morning in the open. If you click that, well, yeah, I'm trying to see right there, the upper distribution. We came 1 tick shy. Wouldn't you consider that a weak reference in terms of selling off, and right now an overnight inventory adjustment that, it was a little long?
It's noticeable. The overnight, it's the high yesterday. It's basically, I wasn't looking so technically at the single prints, looking basically the overnight high. They're about one and the same.
But they couldn't even get the overnight high, so it was kind of a mechanical sell-off, I would think.
Kind of mechanical, yeah. And you're getting a correction of overnight. You're getting a correction of overnight inventory in here. Now, well, we don't know if it's any more than that. Remember, I don't think yesterday's overall market was strong. I'm not saying that at all. I think it was short covering. I think it was old business, and overnight inventory was, is now being corrected. Now they've just gone back to half back. Look at that. This is how fickle. When you see these go to these levels, it just tells you just get trading money in here. But it goes to half back and prints 12 12 ticks, little bounce. Just very, very mechanical, short-term trading money.
But you see that it couldn't get on the upside the lift. It's not a lasting aggressive sell, but it's a responsive selling off of that, couldn't get to the overnight high. They're selling it back because overnight inventory is long. So we expect, or at least 65% of the time, one of our scenarios is to be playing for that counter auction or adjustment of overnight inventory. And now we're coming to the overnight half back, right? I mean, that's one of the references, and then unchanged, and then the pullback. Yeah. But in terms of monitoring or navigating, or, if you want to trade early, which can be dangerous, but
this is knowing overnight inventory was long. This is a very legitimate short up here, but there's nothing that says fall in love with it. Right here you stop 461 contracts now exactly at half back, and we may get more. But understand, if you had a combination of liquidation of overnight inventory and real new money selling, longer term money selling, you're not gonna stop it exactly half back.
Yeah,
we may take it out. But,
Jim, go ahead. Sorry, it's hard.
You may take it out, but it just tells you that if we get a break today, it's a liquidating break. We don't have any indications of really strong selling in here. And I know that confuses people because, well, look how much it's down. That looks like pretty high confidence. Well, it is. It is pretty high confidence. It just looked a couple of ticks below the opening. Didn't break the overnight high. Very legitimate short. And you could get more liquidation down here. But the fact that you even hesitate around the half back tells you we're looking at mostly short-term trading money in here. And that's what we've seen for huge periods of time. Now, the odds are pretty low that this will hold. To go exactly to half back overnight and rally, the odds are pretty low that that will hold throughout the session. Incidentally, we've just got a few minutes left in there. We've been pushing pretty hard for the intensity that starts on June 1st. If you sign up, we start getting the reports, and I do the daily comments on the one-way message for starting May 1st. So effectively, you're getting 2 months of the intensive. The only difference is in June we do about 11 hours of live educational webinars throughout the day. And from time to time, just like you see now, from time to time, if something comes up, we'll do impromptu seminars. Things that really, some days are certainly more important than other days in the market. But what we want to do is just kind of help you go through and navigate these markets. And no 2 days are the same. No 2 days are the same. No 2 periods are the same. But there are some general principles that will help you be competitive in these markets. It's just like I looked this morning. We don't know what's going to happen, but I said the odds are pretty low that that's going to be a lasting low today. What did you do? Go down and take it out by 1 tick that time?
You mean it's not going to be a lasting low?
For today, coming exactly the overnight half back. It may, but the chances aren't very good. It looks to me like we've got some liquidation from weak overnight longs. Excuse me, and then we had some mechanical buying at exactly half back. That's not strong. That's not strong buying.
Mm-hmm. Right, just like it wasn't strong selling off at the open. It's responsive. Obviously, the overnight inventory probably pressured the market a little lower. Wasn't ready to keep going just yet. Adjust it. But I guess it's just a pretty low confidence. But when it bounces off that half back, and it's not likely to be lasting, if you wanted to be in the market, you could on a lift or a pop from there, you could sell into it.
Yeah, you can. The other thing you got, if you're short from, when it failed to take the all-time high, you're always trying to calculate what are the odds of downside continuation. Can it bounce from here? Of course it can. But it's just saying that the chances are pretty good we take it. And, you know, they'll, from time to time, they make me look silly, and they don't. But it took it once. We went down, we took it out by a single tick, and the buyers were there again. But those aren't strong. Those aren't strong buyers that wait exactly for a level like that to get in the market.
And Jim, what would you be interested, you know, what would it take for you to see to take a position today?
I don't know. I mean,
Have to wait.
You know, do I think this is a high confidence market? No, I do not. Overnight inventory is still long. It hasn't been fully corrected. I mean, nothing says, I mean, it's hard for me to do when I'm doing the intensive, but nothing says that I wouldn't, if I wasn't doing the intensive, that I wouldn't have been short right up here. Why? Because I didn't like yesterday. I thought overnight inventory was long, and I had a very low risk. I could, you know, put my stop up here. It was a very low risk. Okay, now, we said that it was, the odds were pretty low that this low was going to be any good. And of course they took it out. Now it's a little more difficult because now they took it out once. Now they took it out again, and it's still not an impressive low. But you know, they've now tried 2 or 3 times down there. It's not an impressive low, but they didn't just take it out and really start to extend on the downside. So we're getting a little more liquidation. Now, look where the market, what's the low right now is a tick above what? It's a tick above unchanged. Again, a weak reference.
Right, and you could tell they wanted to get there. If they, you know, you sell it for an overnight inventory adjustment, that unchanged was a pretty visible reference that they try to get to. Although it's very timid, and this is what I carry forward. Just, you always taught us to, you know, carry forward how it's coming down here. It's not exactly confident and aggressive. It's quite timid.
But it can, you know, there's a lot of hesitation in here. So now it's very unlikely that the market stops a single tick above unchanged. Part of letting you stay in a trade or not is understanding what these references are and understanding what the market's doing. We had the half back. We got the unchanged. You know, now the next thing we're going to be looking at is going to be yesterday afternoon's pullback low, 2105.75. Again, we went back. Now we traded. First time we went to a tick above unchanged. Now we went exactly to unchanged. So actually, this is, you know, that was, well, they took it out. We said it's very unlikely that that's going to be a lasting low. So what have we seen so far? We've got just a couple of minutes, 2 minutes left. What have we seen so far? We saw overnight inventory that was long. We're seeing the correction of overnight inventory. We saw the market come down to half back. We saw it bounce. We said probably not any good. Wasn't. We came back to exactly unchanged. Said the chances are pretty good that that's not going to be lasting. It took it out by 1 tick, but it's still not a high confidence low at this point. No matter what the market does, it's not a high confidence. It's not a high confidence low in here. Now the big number, remember, the big number is going to be 2105.75, and then followed by the overnight low. The overnight low, if you took that low, you're also getting back into the prior 2-day high.
And that's where you had the fulcrum on the report. And it was at 2103.75. That was, you know, staying above 2103, all auctions remain up. Below 2103, something has changed. Is that correct?
Yeah, 2103.75. And, you know, we can look at the bigger chart. Hold on, I'm going to put you on mute for a cough. Just a second. Okay, the tendency is to put the market and look at, let me go to the daily. Oh. The tendency to look at the bigger numbers. I'm looking at this 2-day high right here. That's what I was looking at.
2105 quarter.
2105 quarter may come a little different on the profiles. On the profiles, it's 2103.75. So what I'm really looking for is, I did this, I think the odds are pretty low that this would last. Hold on, I'm sorry. I took a drink of water. Okay, it didn't last. You see how we monitored that? Now, where are we? We're exactly, there's the pullback low yesterday afternoon. Pullback low was at 2105.75. Okay, where are we right now? Just a tick above it. So we're seeing a correction of overnight inventory, etc. And now we've come to just short of the afternoon pullback low. So the next thing we want to say is, if you take the pullback low out, then if there's anything major on the downside, I want to get back into this two-day balance, which starts at 2103.75. And it's kind of a combination. We get below the pullback low, and then the combination, our next reference is our combination of the two-day high at 2103.75, followed by the overnight low at 2103 even. And then if you've got anything on the downside, you start to see some acceleration in there. Okay, we've monitored this. It's kind of a perfect day. It's for teaching. This is a perfect day for teaching. You've seen how we use the references. You saw the reference to the overnight inventory, and believe me, there are an awful lot of traders out there that have no idea about overnight inventory. It puts them at a tremendous disadvantage. But at this point, let me say thank you for joining us in this impromptu webinar this morning. The big reference, the next big reference is 2105.75, which was the afternoon pullback low. If we don't trade below 21 or any real acceptance below 2105.75, then there was no real change relative to late yesterday afternoon. Trading is about change. And if there's change going on this morning, change is going to take place. The first sign of change would be acceptance below 2105.75 and some further acceleration down to below 2103.75 and below the overnight low. So once again, I hope you enjoyed this impromptu webinar this morning. I hope you will give some consideration to the intensive that starts on June 1st, and I start doing the 2 reports and the live comments starting on May 1st. And the only thing we do is tell you, if you join us, we will give you everything we have. We're not always right, but we will commit to give you everything we have. Once again, thank you very much. And Julia, thank you for staying up so late to get this all out last night. We there?
Yes, thank you, Jim.
Okay.
And thank you, everyone, for being here. It's great to see you all, and we'll be back on Monday for a 9 a.m. session. Okay, so tune in and check out upcoming webinars at J. Dalton Trading. And thank you very much, everyone. Have a blessed day. God be with you. Enjoy your Friday, and have a great weekend. Bye-bye.